We're live.
Okay, thank you. I'd like to call the meeting of the New York City Audit Committee of January 27th to order. And I'll call upon the secretary to take the roll call.
Our private members, Michael Spitzer, Chair.
Present.
Mark Kaplan.
Present.
Bud Larson.
Present.
Our public members, representing Mayor Bill de Blasio, Raymond Lee.
Present.
Representing Public Advocate Jumani Williams, Michael Toomey.
Present.
We have a quorum.
Thank you. I'd like to have a motion to accept the minutes of December 9th.
I move it.
20.
I'll second it.
Thank you. And with at this point, I just want to go right into the agenda. Before us today are all the, or not all, but most of the pension and fiduciary funds. Namely, we have all the pension plans as well as the OPEB. So I'd like to start off by calling the teachers' retirement system. I don't, there's multiple screens and you have to forgive us because we don't know where everybody is on, which screen. So for those members here from Teachers Retirement System, I'd like you to introduce yourself and all the members of teachers that are here, as well as, I guess, Sharon, you represent all the plans on behalf of Grant Thornton, as well as Marla?
Yes.
Am I correct? Okay, so teachers.
Yeah, good morning. Hi, it's Mitchell. I'm Mitchell Fruchter, Assistant Chief Accountant, and I'll be presenting the Teachers Retirement System Fiscal Year 20 Financial Summary. Also with me is Pora Rossi, Chief Accountant, Asmi Salib, Investment Accounting Manager, Barbara Okcharchik, Financial Reporting and Banking Manager, Nevena Plachova, Financial Accountant, and Kate Chen, Internal Audit Director. Also here with us, as Mitchell just mentioned, Grant Thornton Auditors, Sharon Campbell, Partner, and Will Richardson, Senior Auditor, I believe. So I'm pleased to present to the Audit Committee a summary of the Teachers Fiscal Year 20 Audit, 2010 Combination Financials. Before doing so, I'll just take a moment, recall the impact of this year. Teachers and all assistants were impacted, of course, by COVID, and I want to take a moment to recall our friend, J.D. Desmorens of Burrs, as well as 2 TRS staff and all other city employees not with us, whose blessed memory we continue. I also want to thank teacher staff, control, and other staff for adopting and allowing for the successful completion of the city pension system's annual financial reports. So in addition to being to being in a remote environment, having this remote meeting, doing the closing and the audit remotely, this was also the first year for Grant Thornton as a city pension auditor. The 2020 financials is the 6th year of the teachers' combination financials. The report combines the 401A pension and the 403B tax-deferred annuity program. In terms of the teachers' net position, QPP net position, the qualified pension plan increased 2.2% and was $59.3 billion at the end of fiscal year 20. The TDA net position increased 4.8% and was $37 billion at year end. The QPP and TDA combined net position was $96.3 billion. $6.3 billion net position also appears on page 182 of the city CAFRA. I'll go through a couple areas of the financials. Investment performance can largely be explained by investment allocations to particular market sectors and individual sector returns. As of June 30th, the pension asset target allocations were roughly 37.4 fixed income, 29.2 domestic equity, 20.1% international equity, 13.3% of alternative investments. You can see a breakdown this year of the alternative investments in the investment footnote on page 44. When compared to, the 2019 allocations, the main difference was fixed income was up at year-end 3%. Domestic stocks were down 2% in the allocation. International stocks down 1%. In terms of how the financial markets were in fiscal year 20, very volatile, obviously. The Russell 3000 returned 6.5%. The international stocks declined 4.7%. Dow Jones U.S. Select Real Estate Securities was down 17.7%. And the core New York Core 5 returned 10.1%. Pension fund as a whole returned 4.9%. That's on page 59. The 4.9% is obviously below the 7% expected return. I think there's some actuarial assumptions being reviewed right now. It's less than the 7% expected return for fiscal year 20. In terms of the longer term, our CAFRA has a 5-year return and a 10-year return, which was still 7.13% and 9.16%. In terms of current investment levels at the moment, or at least as of December 31st, teachers has increased 14.8%. Its combined net asset values at $113.3 billion or $14.6 billion more than the combined $98 billion as of year end. So while funding levels as of June 30th, 20 were 79% using the GASB 67 market value that could be found on page 55, or the more typical actuarial entry method against normal accrued liability at 69.3, which is on page 7 of our CAFRA, and in the investment section. Basically, with current market levels, again, only because the S&P is up 20% and only if sustainable, obviously, this would, help the funding at the moment. The MD&A also includes breakdowns of financial activity by employer, schedules of GPP and TDA cash flow, GPP and TDA percent holdings, percentages of the controller managed pension fund versus the TRX managed variable fund. It's all found in the MD&A pages 13 to 16. Other important fiscal year 20 initiatives was for teachers. We retired one of our investment funds offered, primarily for the TDA, and we added 2 other investment funds. We also had to deal with federal laws like CARES Act legislation. Again, this primarily impacts more the TDA than the QPP. That's my summary in terms of the basic financials, few audit observations, and I think I don't know, the audit observations were 2 had to do with segregation of duties, and 1 had to do with how we terminate our employees and making sure we get that all, get that to the position where we take care of any gaps in those processes. So that's basically my summary. Hope that helped.
Thank you, Mitchell. Before we go, I open up to any questions. I'd just like to point out to any member that has a question, there are members here from the Controller's Bureau of Asset Management, David Jetta, as well as from the Actuary's Office. I don't know if Sherry's on the phone, but I know there are staff from here from the Actuary. So if anybody has any questions, we could call upon them also to assist in the answers. So with that said, I'd like to open it up to anybody have any questions regarding their financials. One comment is, from an audit point of view, it's a clean, unmodified opinion. So I want that to be stated into the record as well. So anybody have any comments or questions regarding the financials or Mitchell's presentation?
I do, Mike. May I?
Yes.
You have in your COVID footnote a much shorter note than the other systems. And it occurred to me, not only is that as little as I've seen in a footnote for any public company or otherwise, these funds have a separate COVID risk other than their market portfolio. And that is that if the disease strikes members, there may be different kinds of expectations of life expectancy and other costs associated with the plan that are not reflected in this general statement that says effectively the COVID impact on the market. And I think you should, one, I don't understand why all the funds don't have the same COVID description, because they're all affected by the same thing. And two, it'd be one thing if the only thing you were talking about is impact on the securities, but COVID will have an impact on when and how people affect retirement. And you don't mention that risk at all.
I don't remember the actual language, but I know that the city CAFR had a larger disclosure,
Yeah, you're on page 54.
Yeah, let me get there.
Yours is the skinniest of the funds we're looking at today.
Good morning, everyone. I just want to add that on the page 77, we mentioned that the ultimate impact of the COVID 2019 pandemic on the plans cannot be determined at this time. So we left this open for any impact.
I just point out that I read a lot of these plans, very few. The only one I see municipally is the city, but I see a lot of them for companies. This is the skinniest one I've ever seen.
And I'm sorry, on what statement did you just refer? What?
There is no page 70.
We have no page 70 anything.
The members have the Blue Book version, not the full CAFRs, Barbara.
Yes, that was, I was referring to CAFRA version.
Well, what we have is the audit report, and my comment is interested in the fact that the footnote to the audit is skinny. And in this day and age, where I come from, the tendency is to say more rather than less, to worry less, to try to fence in risks of liability.
Yeah, so it is page 54 of the of our financial, and yeah, so we my take was that the city CAFR spoke about more specific things to the city payroll, and I believe that at this time, I thought the last sentence covered everything that's related. It is true that death benefits, there were COVID legislation, so there was impact, but in terms of the ultimate impact of COVID and everything else, it really cannot be determined. And who would have thought that at this time our assets would be at $113 billion? So it is short. I thought that I didn't want to belabor it personally. I didn't think that the city payroll made sense to talk about in terms of the, in terms of the actual trust for the teacher's pension. So point taken though.
I just think the three big funds ought to have the same disclosure, because each one has the same problem.
The issue I have is when you had mentioned page 77, are you talking about the TRS CAFR or the city CAFR?
It would be the TRS.
TRS CAFRA.
So why would the footnotes in both of these documents be different then?
No, it's the same. It's the same.
Okay. because, like as Mark points out, when you look at all of the pension plans, and this is for all, to address all the pension plans other than teachers as well, there should be some consistency across all of them regarding the COVID footnote, basically for last year, and I'll say even for this upcoming year. So there should be similar types of language, because all of you are we're all in the same boat. But moving on, are there any other comments or questions regarding teachers' systems?
Mike, if I may, one more. There is a statement here, I'm trying to find it, which talks about the risk of market fluctuation. Here it is, interest rate risk. Is the value of debt would be affected by fluctuations.
What page?
Page 35. And it refers to fluctuation in market interest rates. Normally, you see where you talk about interest rates, you talk about inflation as well. And interest rates are generally sensitive to inflation, as well as, and now maybe you want to take the point of view that factored into when you say in market interest rates. But there are two components of interest rate, one of which is inflation.
So Mark, we can take that into consideration in the future. Thank you for mentioning that.
Okay. I have one other thing, just for fun, for teachers. It's my pet peeve. The name of the city is capital V City. And of all things, the teachers should be able to get that properly named the city. It's all the way through the document. I know we have it starts off in the report of the accountants and goes on. And one other thing I would raise, just going forward, it would be helpful when you send this around to us if you could show what the significant changes in the language were. So obviously the numbers will change year on year, but when you decide that for some reason the description of something that you used last year is no longer apposite, it would be nice if you could do it to show us, because there's no sense trying to focus a lot on the things that are all consistent. But that's just a minor comment. I have some bits and pieces of that sort, and I'll be happy to send this on marked up. I did notice some very substantial changes in some of the accounts. Like, I was trying to find it, and I marked it. If you bear with me for a minute. You have, for example, the cash has gone down a lot year on year, and other assets have gone up. Is that the relationship between the two? What's happened with cash?
Well, yeah, I mean, cash fluctuates depending on obviously the amount at year end, and yeah, other assets. It's probably the other assets is due to other items. It's all detailed in the other assets in the MD&A when he changes, and I think the cash is also detailed. So I don't think I would think it's more the cash and the investment assets are more connected, not the other assets. And just on the name, we do have this pet, issue that the teachers' retirement system has a different spelling. So anyway, we know the city's capitalized.
And then there's a very substantial decrease in net investment income year on year. What explains that?
Decrease in net investment income. I mean, the markets were better in, a year on year in the previous year.
Okay. Yeah, there are other big swings like that are unexplained, but it's not what.
Yeah, in general, I mean, the end just try to explain any variances year on year. I mean, obviously that's one of the main points of the MD&A. So it should be explained.
You got another one like that, $1 billion variance in that number.
Yeah.
Then Forgive me. I marked this up. Happy to see. Oh, if you look at page 19, there's no, I'm wrong. I've got the period. Sorry. I think, Mike, I haven't got anything else of substance.
If anybody has what I'll call nits or minor comments, if you could forward them to Katrina, and Katrina will then pass them on to the auditors as well as TRS.
Call from Jill Harrington.
But if there's no other comments or questions, I'd like to thank Mitchell for presenting and other members, and I see Paul from TRS that are here with us. And thank you, and be safe, everyone. Next up is BERS, Board of Education Retirement System. Once again, looking at the screen, and I have multiple screens. I don't know who is here from BERS, so please, whoever's going to be presenting, identify yourself and identify anybody else from BERS.
Good morning, everybody. My name is Chitra Subramaniam. I'm the Director of Fiscal Operations at BERS. I'm accompanied by our Executive Director, Mr. Rich, our Internal Auditor, Ms. Isafali, our IT Director, Mr. Sebeli, and our Senior Accountant, Ms. Inake. Our auditors are Grant Thornton, represented by Ms. Campbell and Mr. Richardson. I would take a moment to remember our Director of Fiscal Operations, Mr. Jean Daniel Desmond. He passed away in June 2020, and we are going to miss him terribly, and I'll just take a moment to remember. Today, I would like to briefly touch upon our key financial numbers for fiscal year 2020. BERS combined net position for fiscal year 2020 stood at 7.5 billion, an increase of 6% from fiscal year 2019. QPB's net position was at 5.2 billion, an increase of 4% from fiscal year 2019. And TT's net position stood at 2.3 billion, an increase of 9% from fiscal year 19. The increase in net position was mainly due to an increase in the total investments, which increased by 6% from 7.4 billion in fiscal year 19 to 7.9 billion in fiscal year 2020. Return on fixed investment portfolio was at 5.72%, and for variable investment, it stood at 2%. Member contributions increased by 10% in QPP and 8% in TDA. Our total membership stood close to 60,000 members at the end of fiscal year 2020, an increase of 2.3% from fiscal year 19. QPP's net pension as a percentage of total pension liability moved to 94.92% in fiscal year 2020, compared to 94.79% in fiscal year 2019. Actual value of assets to the entry age actual accrued liability stood at 76.6% based on the most recent actual valuation. These are some of our key financial numbers for fiscal year 2020. Among other key accomplishments, BERS recently rolled out the next phase of the ERP project, which now enables our members to perform certain transactions online. And prior to the onset of pandemic, we started the process of relocating to a new location at 55 Water Street. We are looking to fully move to a new location, hopefully by end of 2021. Thank you.
Thank you. Are there any questions? Because following up on Mark's comment, and I don't know if you heard that for teachers, but you have the largest COVID comment in the footnotes. Your comments go for a whole page.
Right.
So, honestly, I don't know if this is too much or too little even, but it's very informative. Mark?
Listen, I come at this thing both from the standpoint of somebody who reads a lot of statements, but also I am a lawyer. And I think that it's hard if you state strictly the facts, to add too much to a COVID description, because the plaintiff's bar in the corporate world is all over these descriptions.
But
I just turned down somebody who wanted me to represent them, going after a financial statement in which they considered the COVID inadequate description of the risk. So I think that's good stuff.
mhm.
But if I can, I want to raise one little business point. If you look at the assets, the currency exposure, I lost the page trying to get to the other one. This,
26.
the 26, yeah. Hold on a sec. If you look at that, you have currency exposure, which is so minor to be trivial. Is it worth taking that kind of thing? And shouldn't you have some cutoff of any size investment that you do in a fund with billions? I mean, I look at the Moroccan dirham of $1,000, and it seems to me you could cut off below the peso or something like that, and have something that says you don't want to watch these exposures, not worth it.
So Mark, can work with the audit. You're just talking about the disclosure itself, or the actual exposure?
I'm talking about the exposure, and the cost of monitoring an exposure has to be somehow.
The exposure is coming from the fact that they're in index funds. So basically, they're just getting their pro rata exposure. It happens to be small for BRRRRs in this case. So this is just a function of the way the index is working. If you're talking about the disclosure itself, we can work with the auditors to only show amounts.
Well, and then maybe it'd be better to indicate that the disclosure is as a result of an investment in an index which has this, and that's why it's so small.
Okay, that's duly noted.
Unless you make that explanation, it looks silly to think you have an investment of $1,000 you have to worry about.
Okay, thanks.
David, that would be across the board for all the systems.
Yes.
So yeah, again, most of these comments, unless they're unique to the system itself, that's like we're talking about, they're pretty much across the board.
Yeah. Okay.
Are there any other comments or questions? One other comment is, once again, this is a clean opinion. Right, Sharon? Okay, if there are no other questions or comments, and also if anybody has any nits or other minor corrections to language or something, please forward them to Katrina, who will forward them on to the system themselves and to the auditors.
Yes.
Okay, thank you for presenting, and moving on. The next one would be NICE's.
Okay.
Thank you.
Once again, multiple screens. I don't know exactly who is here from NICE's, so if you could just identify yourself and any other members of your team that might be here.
Sure, thank you. Good morning. I'm Charles C. Barkley, NICE's Director of Finance. I've been in the role now 2 years. Joining me today are Mario DeSanto, our Deputy Director of Finance, Chun Gong, our Associate Director of Finance, Tom Camboris, our Chief Information Officer, Daniel Nunez, our Chief Information Security Officer, and Herman Bernal, our Director of Internal Audit. On behalf of NICERS, we'd like to take the opportunity to thank you for allowing us to present our fiscal year 2020 financials. Prior to delving in, however, I'd like to also thank Grant Thornton for their professionalism and flexibility To the best of my knowledge, this is the first time any city agency or pension system, for that matter, has assembled both financial statements and, successfully conducted an audit remotely. So that presented challenges, which we were easily able to overcome. I'd like to jump into some of our financial statistics and highlights. So our QPP net position as of June 30th, 2020, reached 69.9 billion, up from 68.5 billion in 2019. Our VSF net position as of 6/30/2020 stood at 353 million, down from 416 million in 2019. The combined QPP and VSF assets under management were 70.2 billion, a slight increase of 1 billion from fiscal year 2019. In terms of market return, the total pension fund returned 3.58% for fiscal year 2020, which is slightly lower than the NYSER's policy benchmark, which is 3.7. Domestic equities, which account for more than a quarter of the total portfolio, returned 4.25. That was lower than the Russell 3000 index of 6.53. Total world ex-USA, EFA, makes up about 13% of the portfolio, and that returned only 0.49%. Emerging markets, constituting another 5% of the total portfolio, returned negative 11.51%. Total fixed income segment, which takes up more than a third of the portfolio, returned 7.61%. In terms of funded status, based on the entry age actuarial cost method, our funded ratio stood at 74.1% as of June 30th, 2018, which is the date of the most recent actuarial valuation. It's key to point out that that funded ratio is up from 72.2 as of June 30th, 2017. And for context, based on NASRA figures, the median funding level for all public pensions in the U.S. stood at 72%, just to give you a little bit of context. In terms of key initiatives for NYSERS, NYSERS successfully launched in 2 phases in 2020, our customer relationship management system. We also enhanced our agency-wide cybersecurity efforts by hiring a deputy CISO to complement Daniel Nunez, our current CISO, and we continued progress on our LRP initiative. So that concludes some of the highlights for NYSERS.
Thank you. You just mentioned cyber. Do you deal with the city's cybersecurity folks?
I believe we do, but Daniel Nunez is on the line. He's our CISO, and he'll be able to expand a little bit more on that topic for you. Daniel, could you help out?
Absolutely, yeah. Yeah, the answer to that question is yes. We work closely with New York City Cyber Command. Jeff Brown is their CISO. Colin Ahern is his deputy. And we work on opportunities where there's enterprise-wide policies, incident response plans, and some technical controls that we leverage as well to ensure that they have the visibility they need for incident response.
Thank you. Does any members have any comments or questions that they would like to bring forth?
No. I will say this.
Sure, I just wanted to point out as well that we too received an unqualified opinion, as you mentioned, for the first 2 systems.
Thank you. You took away my speech.
I got to get that out there. That's important.
It's very important. Mark, I'm sorry.
If you turn to securities lending, I think the language is, it says that you get collateral for reinvestment. Now, what does that mean? You get collateral for that. You get, say, government bonds. So what reinvestment do? You go out and you take that money that you have and you borrow against it and lend and buy other securities.
Mark, what page are you on? Sorry.
Page 25. I think the business, I understand doing this sort of thing. I was in the business, but the idea that it's plus accrued interest for reinvestment. What does the reinvestment mean?
Give me a moment to catch up to you. I mean, what it should say is that we take the collateral. So we receive collateral in return for the security,
Right.
and we reinvest that collateral. You're saying it doesn't say that. I'm just trying to catch up to you.
Says it when you say reinvestment, in order to reinvest, you have to borrow money, right?
No, we receive cash. When we loan the security, we receive cash,
on government securities.
and that cash is invested.
Okay, now what about the government securities?
Government securities wouldn't be, if we receive the government security, that's just held until the loan matures.
That's what I thought. So the only thing you invest is where you get cash collateral. And I would think that that's a small portion of the collateral you get.
No, it's probably the larger portion, but we can clean up the language as soon as I find. Okay, we'll look at that language and make sure it's clear that we're only reinvesting the cash collateral.
I think that would be helpful.
Okay.
If there are no other questions or comments, if anybody, once again, has any minor comments or corrections or typos, please forward them to Katrina, who will then forward them back to the system as well as to the auditors.
Mike, I have one other comment, which applies to all this stuff. There's a statement in here about foreign currency risk. And it talks about the currency markets diversifying, investing globally. This last period of time has revealed that there are American companies which basically are at risk, their price at risk for foreign currencies because of the nature of their business. So when you look at foreign currency risk, it's not only those securities which are traded in foreign securities that make in their home markets at risk, but there are some major American companies which have very substantial currency risk. Is that something that ought to be focused on here?
David?
Yes, sorry, I was on mute. We can address, we do take that into consideration, so we can figure out a way to address that. It's not going to show up when we're talking about foreign currencies, but we can figure out a way to make that point, that we understand that there's exposure even in the domestic security.
You're beginning to see that in corporate America.
Yeah, understand.
I'm done, Mike.
Just have to find a place to put it.
Okay, thank you. And thank you for coming today, Charles, and your staff.
Thank you.
As you notice, it's getting easier, and the questions, most of the plans and the statements are all simple. Differences would be.
Oh, God. Who the hell is that? Somebody is after me. I decline.
Next up would be the police pension fund. And, every morning, 50 people here. Yes.
Okay, good morning. This is Maureen Dale, Chief Accountant, reporting on the combined financial results for the Fire Qualified Pension Fund, Firefighters Variable Supplements Fund, and Fire Officers Variable Supplements Funds. Fire's results were modest. We increased our corpus by 4.8% over the previous fiscal year. At start of fiscal 20, combined net position restricted for benefits was approximately $15.1 billion. We closed the year at approximately $15.9 billion. So combined net position restricted for benefits increased by $721.4 million over fiscal 2019, due in part to overall net appreciation in fair values of invested assets. We also improved our fiduciary net position as percentage of total pension liability for fiscal 20. The ratio was 66.1% compared to 65.4% in fiscal 19. From our combined statement of changes in net position, we reported total additions of approximately $2.2 billion. Employer contributions at $1.4 billion was up 1.5% over fiscal 19, while member contributions was flat at $106.8 million. Net investment gains, although lower by 26.6%, was quite significant at $718.7 million. Combined benefit payments, withdrawals, and administrative expenses reported was approximately $1.5 billion for an increase of 4.9% over fiscal 2019. These payments included VSF disbursements of $44.3 million to firefighters and $25.7 million to fire officers. Administrative expenses at $9.1 million was 7.4% lower than the previous period. On our operations side, we processed over 470 retirement applications for members. They are now on payroll, receiving 90% of benefits pending final calculation. We also processed approximately 330 new member applications for probationary firefighters who are now contributing members of the fund under Tier 3 enhanced legislation. We closed approximately 17,300 retirees on the payroll and approximately 11,000 active members. Thank you.
Thank you very much. Your COVID note, once again, is one of what I will call the smaller notes. And we've talked about that before, as I'm sure you've heard. Are there any questions or comments from any of the members? And as you've heard, pretty much some of the comments that you've heard before affect your statements as well. So they don't really bear repeating, but any other comments or questions?
Yeah, Mike, if I may.
Yes.
You have a much more fulsome description of the liquidity involving what you characterize as hedge funds. It's on page 34. The other funds have, I'm sure, similar kinds of investments, and you have a much more detailed description of liquidity. If that's the right thing, we ought to have the other funds look at that kind of thing. And if it's not, and you just don't want to be special, that's okay. But I noticed that difference.
Hi, Mark. This is George Tiavage from Bureau of Asset Management. I'll answer that. We are planning to roll out more lockup periods for private equity, real estate, and infrastructure deals. We're going to expand a little more on the fund life and give a little bit more transparency to any, redemption preferences that they do have, similar to what we put for hedge funds. Police also has that schedule as well. It's only for those that are invested in hedge funds, so they have that as disclosure for topic 820.
All right. Well, then let me ask the next question. How many of these funds are truly hedged, and how many of them are just long or short or some other strategy?
We can provide that as well. They do have long short structures. Some are macro. We can add, I guess, investment style or event.
But everybody tends to look at these funds and say they're all hedge funds, and we all know, those of us who lived in that world, they're not hedged, most of them. Well,
That's
many.
correct.
And
especially with the hedge funds, all the chaos that's happening right now with current hedge funds that are being looked at regarding their short positions. But it is important to show the long short.
It's a different category. They're really investment managers who get a bigger share of the pie.
Yeah, we can actually show that next year because we do have that level of detail.
I'm sure you do. I think that's a good disclosure.
Okay.
The guy who started the hedge fund business was a Mr. A.W. Jones. He wouldn't recognize his progeny. I'm done, Mike.
Thank you. Thank you for presenting. And once again, before I go,
Mike, if I could
receive the clean opinion.
Mike, if I might, I have kind of a question that maybe goes to the auditors more than the individual funds. But I noticed that COPS, the new IT, I believe, system has begun to roll out. And over the years, there's been various information systems run by the 5 different pension systems of different quality. And I believe there's been hopefully some efforts to upgrade them all. And I'm just wondering if the auditors have any comments about how successful those improvements have been, and if there's still work to be done. And it's the strange thing that we've noted in the past is we have 5 systems that are doing very similar things, but they all own their own separate systems and run them separately as far as data processing and IT is concerned.
Yep. So, but that's a great question. I appreciate you bringing it up. We did notice that the implementation of new applications that each of the systems are using, some of them are using new ones. I would like to introduce our principal in IT assurance, Matt Thompson, who is on this call. He might be able to give a little bit of background on his thoughts as it relates to that.
Yes, absolutely. Thank you for the introduction. So the good news is we did not note any significant deficiencies with any of the systems that we looked at, which is very good. And the findings that we did note were more minor control deficiencies and some areas for improvement that we did make recommendations to management for. I would say for COPS in itself and the new implementation, there was nothing that really caused us concern related to that. Therefore, why we didn't have any significant deficiencies. I think so we're seeing very good progress in the direction that all of the different systems are going. I think when it comes down into your question about the different systems and how they do very similar things, but how they're very different, that is something that I think is kind of more of a management decision to do. But from a true controls perspective, we really do not have any concerns that we really think warrants the attention of this committee.
That opens up the bigger question of why you have 4 or 5 things that where the city backstops them all realistically, and they have to operate independently, which adds to the cost and the administration of them. And wouldn't it be better if there was one gigantic pension fund and get the benefit of that aggregate size? I ask that question every year, and every year I'm told it's hard to do. But in a time when the city is strapped for money desperately, to have a situation in which, I guess I believe it would be possible if you combine them all to have a substantial cost saving, why somebody isn't looking at that? That's a policy question. I only ask it because it bothers me.
Every big policy question. I don't know if the people actually that are on this screen can even handle or answer that question.
I know that, Mike. Just had to say it.
While they can't, I often think that it would be appropriate for this committee to comment on that topic, at least publicly. I mean, because it's something that's sitting out there that nobody's even noticed, who is noticing it and who is responding to this issue. But while I can be appreciative of the fact that you may want 5 separate pension boards because of policy issues and differences in labor issues and what have you, the day-to-day administrative functions of the 5 pension systems are exceedingly similar, and we have a significant amount of redundancy, and we're continuously upgrading one after the other to try to catch up with quality. And whether it's not here or whether it's in the management report that comes out as far as a part of the audit, it just seems like at some point, someplace, we should be commenting on this topic.
I think maybe the proper way might be something coming up in our annual report. Like we should take this discussion and put it to paper there.
All right, I just would hope that we continue discussion and just not drop it until next time we look at the pension.
No, fair enough.
Those of you who have been in government would understand this better than I, but the ultimate responsibility for the city, doesn't it represent, it is the mayor. And shouldn't his office be looking at finding a way to save the money that's available here? I know that's nothing to do with the audit committee. I'm just asking because I'm ignorant of the realities.
Yes, but the ultimate decision maker is the state legislature.
Oh, I got it. Then it's a hopeless.
And whoever influences the state legislature.
Okay.
Moving on.
Okay.
That concludes all the pension plans. The only one item left before us, I guess, is Raymond regarding OPEB. So Raymond, are you going to move to the other side of the table?
Yeah,
move on the other the virtual table, yes. So I'm here to represent the OPEB plan's financial statements. With me today is Andrew Dowling, also from OMB, who's the Assistant Director for Miscellaneous Budget at OMB, and also William Kennelly from my team. So this year, in fiscal year 2020 for the OPEB plan, as you probably noticed, the biggest item this year is that the city has drawn down on the OPEB trust for the first time during the de Blasio administration. So in fiscal 2020, the city used $1 billion of the trust to cover the fiscal 2020 pay-go. You'll notice the effect of that on the net position and also the employer contributions. Net position was down $880 million from fiscal 2019, and the contributions were down by over $600 million. Other than that, the plan activity has stayed fairly consistent. There was an increase in benefit payments of $175 million in fiscal 20 compared to fiscal 2019. But otherwise, the other expenses were fairly consistent, and investment income was down a bit compared to fiscal 19 by $25 million. And the OPEB liability year over year was pretty consistent from $112 billion to $113 billion. The effect of COVID-19, I think, for the plan politically is pretty hard to project at the moment. As part of the plan expenses, we pay what we call the HIP rate, and that's determined every single year. And the effect of COVID right now is unknown. As mentioned before, with the retirement systems, people whose health are impacted, people who might take out of retirement, that is also at this point, I think, a little hard to project. And then I think that's basically it for the OPEB plan.
Question I have is, within the 21 budget, is there any plan to further draw upon the assets?
Yes, the plan is still to draw down 1.6 billion. And that has been pretty consistent through the last few versions of the plan.
So of the $3.8 billion in that position, you're planning on drawing down 1.6 billion of that?
Correct.
It's the piggy bank.
I know what it is.
I know. It's the biggest single liability on the balance sheet.
Yep. All right. Yeah, curious, every other plan calls it COVID, but here COVID disclosures listed under other matters. And I think it's big enough and important enough to draw a distinction to it, but it should have its heading COVID.
We'll take that into consideration. It was mostly a...
My guess is, too, that one of the risks of COVID is an increased death rate over the otherwise expected death mortality.
Yes, but I think we're not really sure how it's going to play out. We've seen this, and this might be more of a anecdotal, but people also retiring earlier, and that will add them to the pool of each year's pay-go.
I think the biggest COVID risk is going to be the COVID risk on the city's financial plan and the fact that it's going to put more pressure to do a bigger drawdown on this fund to fund the city's obligations. That COVID risk hangs out there.
Yeah, well, the fact that this the income side of that's what you're saying, the income side of this financial statement.
Well, the income side of the city is impacted by COVID, and because it's been impacted so severely by COVID, they're going to probably have greater pressure to increase the drawdown out of this COVID fund. Up until recently, while it's not a significant fund, the city's been adding money to the fund. The pressure on the city's financial plan results in part of the decision process as to how much money is going to be drawn out of this fund. And I think COVID is an issue that's going to put significant pressure on that decision-making process.
It does, but I think I also want to say that the mayor's office, they're, why they've taken $1 billion and in the plan to take 1.6 billion in fiscal 21, are trying to not use up everything in the trust, understanding that they have
I'm
to fund
agreeing that they're
benefits.
trying not, but they're under significant pressure. That's a pot of money that's sitting out there when they're trying to address the overall significant problems in the city's current financial position because of COVID.
Yep.
Okay, that concludes. And thank you, Raymond, for presenting. And if there are no other questions or anybody has, once again, comments or nits to these financials, please pass them on to Katrina. And once again, just want to get into the record that it's a clean opinion. And that concludes all the organizations that would be appearing before the audit committee this morning. I don't know if there's any other things that have come up that we need to discuss, except for one thing, just to confirm the calendar. We do have set up already the calendar for February 24th and March 24th. It would be the next meeting after that. And at this point in time, the organizations that will be coming before us have been set. I don't know if there's any other changes. On April, like I guess in February, we'll pick the date for the April meeting because that on my calendar is still left to be set. So at least for now, we have our next two meetings set up for March and February. And if there's nothing else before us, I'd like to have a motion to adjourn the meeting.
I move.
And before I really say that, that we're adjourned, I would like to thank everybody that came before us this morning. And I want to wish you and families all be safe and be well in these very trying times. Thank you. And thank you, Mark, for making that motion.